What you're about to see is a video snippet from inside the boiler room. Every single morning before the open of the US stock markets, I analyze dozens of stocks and then decide on the trades that we're going to look at for that day with dozens of traders. We all get together, execute trades, chat some, and make some money together on a Zoom conference call. Go to thepatterntrader.com/club to find out more. You know, you look at Restoration Hardware, down from 750 to 250, down 60% already, you know, and probably likely go down another 60% from here, you know. So these are just massive, you know, we have to keep an eye on the patterns, you know, because you do get these huge distractions, these huge short covering rallies. 200 to 350 is no joke if you're on the wrong side. So it's been trying to like catch lightning in a bottle, but this kind of tells us the story. So you got to be very careful. So even if you play these short covering rallies, you got to understand that it's just a play. It's just a trading. I've been saying this is really a trading market. And the real moves are, you know, the downtrend. So, you know, now once this thing's ready to get in sync with the real trend, you know, but then you've got kind of this level under here. So between 250 and 200, you know, it's going to be a bit of a minefield. But, you know, once you clear this 200, there's just nothing to stop this till $75. And that's what it looks like. It just looks like total carnage. And we see asymmetric risks all over the place. So the Bank of England, you know, the quantitative easing, then the next day the quantitative tightening, then they're trying to undo the tax policies, and you got the yen, you got Ukraine, you got China. So I always felt like this world was, you know, kind of held together by a piece of dental floss. That we've got this huge amount of debt, then you got derivatives added to it, you know, and so everything has to go perfectly well and synchronous for it all to work. And, you know, when it starts to unwind, you know, just look out below. This is just margin and debt and leverage unwinding, you know, and leverage is, you know, great on the way up. But when it starts to unwind and everybody's looking for a chair, when the music stops, you know, this is where you get Bear Stearns and Lehman Brothers and long-term capital management in 1997 or 1998. That was a hedge fund that got itself in so much trouble that it had to be bailed out by the US government or was going to take the whole financial system down. Now, you know, there is some hedge fund out there loaded up on the wrong side and is now trying to get out. And it's like, you know, GameStop, you know, cost these hedge funds tens of billions of dollars because they were caught the wrong way. So, you know, everybody's caught the wrong way now. And there's, you know, just not enough chairs. So it's just the great unwind. It's 14 years of zero cost money. You know, when you have zero cost money, you just have, you know, these giant distortions, NFTs and housing going to all kinds of crazy valuations. You know, SPACs, IPOs, you know, Cathie Woods can buy all this shit. Because, you know, Palantir at the zero cost money, you know, you can project out cash flows to infinity at a zero cost money. But once you go to 4%, all these projections go there. So that's the problem. Now you've got $31 trillion of debt, you know, United States government can never pay that back. So they need inflation to pay back in cheaper dollars. I don't think this is an accident. We're fucked. This is just a great unwind. This is hubris, and I don't know, man. It's not going to end pretty.
No, if you saw these, you mentioned about these hedge funds, you know, being stuffed here. Have they not actually seen what's going on and got out of their positions earlier then?
You know, I can't speculate. You know, that's the thing about hedge funds is that they're private. They don't disclose their positions. And we don't know what's buried there. We don't know what's buried there. You know, look at this Melvin Capital. You know, shorted GameStop at $4 or $5, you know, thinking that it was going to go broke. It should have. It was a game player that was a dinosaur, and it was in malls at the time COVID come, and all the malls were shut down, and all their stores have been shut down. So this should have, gone to zero. But then, people, saw that they had 140% short interest. And that's the problem with the system too. How can you have 140% short interest? Because in order to go short, in order for me to go short, I need to borrow the stock from somebody. So if you're long GameStop and you're just sitting there and you're not going to do anything with it, I come along to you and say, hey, can I borrow your stock and pay you a fee? You go, yeah, no problem. The problem is the broker can loan out that guy's stock to an infinite number of people. That's the problem. So now
I see.
All of these people have loaned this stock from this one guy. And now you had 140%. So you had 140% of the outstanding float short. So these guys, on the Reddit Market Beats website said, let's have some fun and put these guys under some heat and start buying this thing. 7, 9, 15. And these guys are saying this thing is bankrupt. There's no rationale to this. But, the markets can stay, irrational a lot longer than you can stay solvent. So I think Melvin, fucking had to get out of 350, and this thing went to 550, $25 billion market cap for a company that has no assets. So yeah, it's insane, but the markets can stay insane, and then you get margin calls. This is the problem. So this was margin calls one way, but most people are long. So now you're going to get margin calls that way. And, just like, Melvin Capital, you watch it 15, 20, 30, 75. How much heat can you take? And you're saying, well, it's got to turn around at some point. But when it doesn't, the banks come and say, hey, look, you got to put up more collateral to hold these positions now. And at some point, you got to pay or quit. So it's a house of cards. There's a great movie. Somebody referenced it last week. One of my all-time favorite movies. You guys should check it out, because this is what's happening. It's
margin call. I saw it at the weekend, last weekend. It was brilliant. I'm surprised I'd never come across it before.
I know,
it was absolutely brilliant movie.
It's a small movie with Jeremy Irons and Stanley Tucci and Demi Moore, and great cast. Kevin Spacey. But it really was kind of about the 2008 kind of Lehman Bear Stearns thing, where, some kind of, guy in the risk department starts figuring out that their positions are getting lit up on the wrong side. And so, he was literally a rocket scientist. Nobody at the firm really had an idea what they were sitting on, to your point, Duncan. So, you're saying, well, don't these people probably, 3/4 of these people at these hedge funds don't even understand what their positions are. You need some rocket scientists to come and tell them, hey, we're tits up here. Sorry about that. I didn't mean to use that expression. That's the problem.
And history's repeating itself.
What's that?
History's repeating itself.
Well, so there was a guy named Kondratiev. He was an Austrian economist, and he talked about these 50 and 100-year cycles. And it is amazing. If you look at, this is exactly where we were in the 1970s, 50 years ago. 100 years ago, we had, the bubonic plague. And then now we have Corona, exactly 100 years later. 100 years ago was the Great Depression. It's just amazing. But these waves are amazing. So history does repeat itself. The problem is nobody really, understands history anymore. We're so buried in Twitter and, looking at 100, we're looking at 140 characters every day, just exchanging complete banality and stupidity. And nobody has really an idea or really respect for history. We're actually throwing out history. We're burning statues here. Abraham Lincoln High School in San Francisco had to change their name. Abraham Lincoln was just not good enough for their high school. So this is what happens, and we don't understand history or the consequences. And I've been saying this since last year, and I don't want to be, know-it-all and what have you, but there's cause and effect. When you overstimulate demand, we had 3 separate COVID stimulus bills. The last one really put us over 1.9 trillion, right when the economy was so overheated. So you're overstimulating demand. At the same time, you're punishing supply, taxes, regulation, ESG, demonizing wealth, all this crap. And, the difference is when we were in this situation in the 70s, yes, you had Volcker come in and take interest rates to 20%. But then Reagan came in and said, the bull is back. I'm just going to get out of the way of the markets. The markets are, the most efficient way. Now we're trying to control everything through the government. And that's when you get social engineering and fiscal engineering, bad things happen. Got to get out of the way. The market is bigger than anything else. We've seen this in England. The government, the Bank of England, try to muscle the markets, but the markets are bigger than anything. And so, Reagan got out of the way. He cut taxes, he cut regulations, he freed up entrepreneurs, he let the system kind of, start working. And it took 3-4 years to turn it around. But then it unleashed, one of the biggest bull markets we've ever had. Now we have completely the opposite. We have all of this, government in our face, and then you have the war in China, and it's just a mess. And it's just it's a race to the bottom. So again, we're just trying to figure out how to make money here. So I'm not trying to play economist or historian or what have you. Yes, I do have these macro views and this and that, and it kind of gets in the way. It really does. That kind of thinking, it gets you emotional and what have you, because you got to also see the trap. So I've been so positioned in my mind for what is happening now. But then, you have these moves where, restoration goes from, 200 to 350, almost doubles the other way. So that is what trading is. It's you've got to see the opportunities, but also see the potholes, and you've got to just be very objective. And so, all this other stuff is just conversation. It's risk and reward. And the patterns tell you everything. So that's the thing, these patterns, but that is really the challenge. The markets are about price and time. Hey, if you would like to trade alongside me every day and join our most prestigious program, then head over to thepatterntrader.com/club for more information.